Welcome to the Advanced Freelancing Podcast. Every week, you'll hear strategies for building your online service-based business your way. And now, here's your host, veteran freelancer, author, and TEDx speaker, Laura Briggs.
Can you believe that it is already tax season 2022? Well, it is. It's just around the corner, and now is the perfect opportunity to start gathering all of your materials to be ahead of the curve or at least meet the deadline for this season's tax filing requirements. I don't know about you, but it always feels like tax season sneaks up on me. So in this episode, I will be going through some of the tasks that you should be doing to prepare for filing your taxes. Of course, the usual disclaimer, I'm not an accountant, I'm not your CPA, and I don't give professional tax or financial advice. I'm just sharing some tips in this podcast to help you get ready for tax season. But of course, the first and most important tip I'm going to share is that you should hire a CPA. And not just any CPA, you should hire someone who has experience in doing taxes for people with at-home businesses. I've shared in previous episodes the mistake that I made my very first year as a freelancer when I was doing it as a side hustle. I hired just a local CPA, literally Googled, my town's name and CPA, and worked with someone. And he had a lot of experience doing people's taxes when they had traditional income sources like W-2, but didn't end up getting me all of the deductions that I was entitled to. And I learned that very important lesson and got a personal referral from a friend for a nationwide firm that specializes in at-home business owners. And even though a lot of their experience were working with people like Etsy sellers and drop shippers and eBay resellers, I found that they really had a good understanding of the tax issues that influence independent contractors and people who are self-employed. This is really important because this landscape is a tricky one, and it's really important that you have all the right material to claim every deduction you can, but also that you file your taxes in an organized fashion, because in my opinion, the IRS is kind of still learning what taxes and submissions look like for self-employed people. Many of you know that I've had issues with double and triple counting 1099s, and the agency has also been seriously understaffed for much of the last 2 years. So the better that you prepare your taxes and submit them as accurately as possible, the lower the likelihood that there are going to be problems, that you're going to have your refund delayed if you're entitled to refund, that you're going to throw up a red flag that's going to lead to confusion and you having to submit evidence. So that's my first real tip: hire a CPA. And hire a CPA who knows what they are doing. They are well worth it. They will probably save you, depending on the scope of your business, hundreds or thousands of dollars. And so find someone who can be there not just for you for this filing season so you can meet the deadline, but I really recommend finding a CPA and a team of financial professionals that can grow with you and your business. So once you've hired this CPA, or if you have one you've worked with in the past, I like to meet with the CPA to go over the numbers. This is also to compare where you were last year and kind of look ahead, a little bit of a projection into the coming year as well. Now, I think that's important because when your CPA or your tax professional prepares your tax return, that information is going to be used to calculate your quarterly estimated taxes for the year ahead of you or the year you're currently in, right? So for this episode, it would be 2022. So whatever I made last year and whatever the accountant comes up with is going to be used for what I prepay in 2022. Now, if you think your income is going to be dramatically different in 2022 or whatever year you're in, communicate with your CPA about that. If you should be setting aside additional funds because your quarterly estimated taxes are going to be really low. Now, still based on your guidelines, like paying that first one is going to be in line with whatever your CPA comes up with, but you need to discuss with them if you think, maybe your income last year was really small for one reason or another, and it's expected to grow a lot this year. You want to set aside money accordingly. So meet with your CPA to go over the general numbers. Usually I find too that this conversation sparks me to grab some additional information. So I might have forgotten to get my mileage numbers, or I might realize that I don't yet have the tax return or the tax information from our mortgage company with the interest that we've paid on our mortgage. So I like to have this meeting just to kind of discuss, hey, this is in the ballpark of where I'm at with income and expenses. These are some of the questions I have. Is this a deductible expense? Throughout the year, I use software to track all of my income and expenses. And there's a category in there called Ask My Accountant that I created. And it's for things that I'm not 100% sure, like I spent it for the business, but I want to verify that it's okay for me to deduct it. So that's when I will bring up those questions as well with my CPA during this call. So you don't need to be necessarily completely prepared going into this meeting. This is a high level meeting. Another reason for doing this is to see if now is the time for you to consider filing an S Corp. Because even though you may need to pay more taxes this year, if you're not an S Corp, if you're an LLC that's taxed as a sole proprietor or a sole proprietor, the sooner you know that you need to go to S Corp status, the easier it is for your accountant to prepare those documents, submit them, get you set up. There's some specific things you need to do if you become an S Corp, like payrolling yourself and having regular meetings and minutes recorded from those meetings. So rather than wait until the end of the year, it's much easier to do this in a February or a March and ask your CPA if they can backdate the creation of the S Corp to January 1st of that year. A lot easier to do that when you're much closer to the beginning of the year. So your CPA can tell you if it seems like it's a good fit for you to go to S Corp status. I've heard numbers all across the board about what your revenue should be. I would say start having that conversation with your CPA if you are over $50,000 or $60,000 a year in revenue. If you are over $100,000 a year in revenue, definitely have that conversation with your CPA. They can also run some calculations to tell you more about what you would save versus what you would spend. So for example, if you go to S Corp status, one of the first things you'll have to do is pay your CPA or a lawyer to draw up the paperwork to have that happen, to file it and get it set up. That can cost anywhere along a range. I would say estimate $1,000 or $1,500 to do that. You're also going to, of course, have to do that payroll. So you might need to set up something like Gusto to payroll yourself as an employee of the firm that you're creating. And so have your CPA run those numbers to say, here's what you could potentially save in taxes, and then here's what you're going to spend. So the year before I went to S Corp status, I wasn't anticipating huge improvements in my income. But so I had them run those numbers and they said, yeah, it's going to save you like $1,000. So it's probably not worth the headache. However, that year that followed, it became urgent for me to file an S Corp because doing so was going to save me well over $10,000 to go that route. So it's all very personalized to you, where you're at in your business, where you're headed in your business. But I strongly recommend that you consult with your CPA and do that in this yearly call to say, hey, does it make sense for me to go to S Corp if I haven't already? Now, if you're already in S Corp, you might want to be talking to your CPA about some other things that you could do that could have positive tax impacts. Ask them for specifics on that. You may also want to talk to your retirement professional about, are you at the maximum contributions for your retirement, and other things that can just sort of help you tax-wise. So the next thing that you should do, and ideally at this point in the year, you should have already done it, is to send 1099s to any freelancers or subcontractors you hired who earned more than $600 in the 2021 calendar year. Now, there are some caveats to this. You don't need to do that if you paid them via Upwork, and you shouldn't have to do that if you paid them via PayPal. However, there's no harm in you doing it. However, just be careful. Let's say that you're working with a freelancer who gets paid a lot on PayPal. They may get their own 1099K. Now, the rules just changed for everything with like PayPal, Venmo, Cash App, that kind of stuff, where starting in 2022, they're going to send a 1099 to anyone who makes over $600 on their platform in the year. It hasn't been that way in the past, and it's been really all over the place. So PayPal would say like, you have to have over 200 transactions in a year and you have to generate more than 20K to trigger the 1099K. So like some years you'd make it on the money requirement, but not the transactions one. And it was just really hard for anyone to plan if they're going to get a 1099 or not. And then what happened with me is some of my clients who paid me via PayPal also sent me their own 1099s. And it just created a lot of confusion with the IRS, who thought that I was underreporting, even though we were talking about the same money. So that's why it's been a little tricky. This is how I handle it. I ask the freelancers I work with, hey, here's the current guidelines for PayPal. So I would look those up for 2021. You're probably going to find the info for 2022, but remember that doesn't kick in until January 1, 2022. So if anyone you paid last year is probably going to be under those old guidelines. So I would look that up to see if that is the 200 transactions or over 20,000 a year. I ask my freelancers, hey, do you think you're going to trigger this? Do you expect a 1099K from PayPal? Otherwise, I will send you a 1099. It used to be a 1099 MISC. That is something that you can fill out with any number of online tools. The one that I use is called e-file my forms. It's like $3 to file it. You're going to need to have a W-9 form on file for any of those freelancers that you worked with. You also don't have to worry about it if the person is abroad, right? So if you have an Australian or a Canadian VA, you definitely want to track the expenses that you paid to them, but you don't need to 1099 them. So this year you need to file what's known as a 1099 NEC form. You can, like I said, that's relatively easy to do online, and you can send email copies. So what I do at the end of every year is I make a list of all the freelancers that I owe 1099s to. I run in my software and see how much I have that I owed, that I paid them. I email them that number and say, hey, I have that I paid you $6,500 in 2021. Is that correct? Is that what your records have? And that way I can fix it if something is incorrect. And then I fill that out and I send them a digital copy of it. And then I pay the service to file it directly with the IRS. So send your freelancers your 1099s. I feel like the deadline is the last week of January, but if you're listening to this episode and you haven't done it yet, go ahead and do that. Now, the other flip side of that coin is to make sure you have all the 1099s you are expecting from your clients. Throughout the year, when I sort of do my monthly and quarterly check-ins, I will make a list of, have I added any new clients in the recent past that I'm going to expect a 1099 from? Do they have my W-9? And that way I can remember at the end of the year to go back and say, these are the 7 1099s that I am expecting. And if I don't get them from those clients, I'll reach out to them and say, hey, are you sending me a 1099 or not this year? So make sure that you have all of your 1099 forms. When a client gives those to you, they have already sent it to the IRS. So it's just wise to put it in with the rest of your tax situation as well. As you are preparing your taxes, really important to double check your expenses and your accounting numbers. If all of your incoming invoices and payments don't communicate with each other, you need to make sure that that gets fixed, right? So let's say that you use Wave apps, but it doesn't connect with your bank account. You need to reconcile everything in Wave apps that you received and then match that in your accounting software. You want to double check all of your expenses and add things like business meals, mileage, conference registration fees. A lot of times it's these one-off details that get forgotten. I have trained my accounting software to tag things that are paid to certain people so that it always gets categorized the right way. So payments to my team get tagged as contractors and freelancers and things of that nature. But it's good to go through that whole list as well as anything that's uncategorized at the end of the year to make sure that you have captured everything. This is also a good reminder, if you don't yet have accounting software, now is a good time to invest in it, especially if your tax situation has gotten more complicated or you're realizing just how many transactions you had in 2021. There are many great tools out there. Xero is one option, GoDaddy Bookkeeping, QuickBooks is the other one. That one's a little more complicated than the other two, but that way you have these systems set up to track that information ongoing and it doesn't become this stressful thing at the last minute where you're rushing to get that information together. Now, there are lots of different deductions that you can take as a self-employed person and as an at-home business owner. Do some research online to make sure you've categorized everything. So let's say that you own a home and 25% of your home is dedicated to the home office that you run. You can deduct a portion of your rent or your mortgage for that home office, as well as a portion of your utilities. There's so many other things, books, courses, coaching, conference fees, website registration fees, membership fees to Upwork. In general, if it is something that you use for your business and it is essential for your business to run, mark that down as a potential expense. And if you have questions, you can ask your accountant. Internet is also another thing. And if you use your cell phone or have a separate line for your business as well, those are possible deductions. So do some research before you give all your information to your accountants, because they're not necessarily going to know how to look for that. And so it's always better to just ask and say, hey, I spent this. Does this count as a deductible expense? So do that research on your own first, and there's a much better chance that you will get really good answers to those questions as well. Match up the numbers that you have from clients with 1099s as well as what's in your software. I had this issue just this year. My client sent me a 1099 for something like $1,600. I had in my reconciliation that we were in the 3,000 somewhere. And then when I asked them about it, they went back and were like, oh, actually, we paid you over $6,000. So it's very important to have those good records, but also ask questions if discrepancies do come up. I always do this with all of my biggest clients. I want to make sure I have the exact same dollar amount that they do. I want to make sure they're not counting any checks or payments that they made, maybe December 31st, but didn't really clear on my system until January 3rd. So I want to make sure those things are reconciled properly so that I am reporting my income. Now, the more that you have automated software and things that are being tagged as you have expenses and as you bring in income, and the sooner you get a CPA, the easier it is to move forward with your taxes and meet the filing deadline. It's very hard to sit down and do this all in one solid step, right? Because you may not have all of the information that you need in order to file your taxes. So I break this down over the course of several weeks and make this into something where I keep a running list of what I'm missing. Am I missing a 1099 from this client? Are me and another client going back and forth on the amount on the 1099? Am I unsure of my mileage? Am I missing a piece of paper? Then once I have gathered all of this information, then I present it to my CPA as well as a list of overview things. In your overview things, don't forget stuff that's non-business related, right? Did you have a child this year? Did you buy a home this year? Did you make other investments this year? Do you have side hustle income outside of your business that you need to account for those 1099s as well? So I always include a cover letter of, are there any changes with dependents? Are there any changes in our residency? Are there any other issues that they need to be aware of when filing our taxes? And like I said, it's always better to ask rather than to just assume they will find this stuff, because your CPA can only determine if something is a deductible expense or how it fits into your tax picture if you give them that information, right? So always better to overshare a little bit here and to ask some of those questions about what might happen. Consider this your reminder to reach out and get a professional CPA if you do not already have one. And I'm wishing you a successful and streamlined 2022 tax season.